This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices fell on Thursday, with investors turning cautious on expectations of lower demand as U.S. employment and business data came in weaker than forecast, signaling the economy of the world's top oil consumer may be cooling. Brent crude futures were down 60 cents, or 0.69%, at $86.74 a barrel, while U.S. West Texas Intermediate crude futures fell 63 cents, or 0.75%, to $83.25 by 0651 GMT, with activity thinned by the U.S. Independence Day holiday. Geopolitics and weather remain bullish risks, but the underlying physical market strength looks set to turn softer, Citi analysts said in a note to clients, adding that physical markets are trading post-summer September cargoes when demand could soften partly due to hurricane risks.
U.S. crude stocks plunged by much more than expected last week as refining and export activity increased, while gasoline and distillate inventories also fell, the Energy Information Administration said on Wednesday. Crude inventories fell by 12.2 million barrels to 448.5 million barrels in the week ending June 28, the AS said, compared with analysts' expectations in a Reuters poll for a 680,000-barrel draw. Strong exports, a slight drop in imports, and a rebound in refinery runs colluded to draw crude inventories, said Capital Oil analyst Matt Smith.
Moving on to the top news in the energy sector.
Onshore fuel oil stockpiles at key trading and storage hub Singapore edged up to a two-week high, with net imports recovering for a second straight week. Inventories inched 1.6% higher to 19.60 million barrels, 3.09 million metric tons, in the week ended July 3, Enterprise Singapore data showed. Net imports of fuel oil, calculated by subtracting total exports from total imports, climbed 34.5% week-on-week to about 927,000 tons. Top cargo origins were Kuwait and the United Arab Emirates, excluding storage movements from Malaysia.
China's state oil companies have been told by the government to add 8 million metric tons or nearly 60 million barrels of crude oil into the country's emergency stockpiles to further boost supply security, according to analytics firm Vortexa and trading sources. The stockpiling program covers July through March next year. Next, we have the top news in metal markets. Gold prices eased on Thursday but hovered near a two-week high hit in the previous session after softer than expected U.S. economic data fueled hopes that the Federal Reserve could cut interest rates as soon as September. Spot gold fell 0.1% at $2,353.14 per ounce, as of 0637 GMT after hitting highest level since June 21 in the previous session. U.S. gold futures lost 0.3% at $2,363.10. U.S. economic data on Wednesday, including weak services and ADP employment reports, showed a slowing economy. A separate report showed an increase in initial applications for U.S. unemployment benefits last week.
Copper prices rose on Thursday on a weaker dollar, but poor economic data and softer physical demand at higher prices capped gains. 3-month copper on the London Metal Exchange rose 0.1% to $9,877.50 per metric ton by 0820 GMT, after rising 2% in the previous session, the biggest daily gain since June 6. Meanwhile, the most traded August copper contract on the Shanghai Futures Exchange closed up 1% to 79,870 yuan, $10,984.58 a ton.
We will now look at the top news in the agricultural sector.
Brazilian corn exports for July were estimated at 3.4 million metric tons, a 2.4 million tons rise compared to June, as the shipment season gathers pace and soy exports lose momentum, grains traders lobby annex said on Wednesday. If confirmed, corn exports for the month would be around 2.5 million tons below July of last year, when Brazil harvested a record second corn harvest and China was more avidly buying the cereal from the South American nation. Still, China was Brazil's top destination for corn exports this year through June, accounting for 20% of all shipments, according to ANIC.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.